and we would like to have a discussion on an interesting topic, which is inverted duty structure, the refund on inverted duty structure, and a lot of intricacies in that. So, as we promised, we will bring the Shreyas thoughts every week with different topics, not only focusing on indirect tax, probably topics like direct tax, topics like general finance, accounting, etc. Now, just to introduce the speaker, today's speaker will be Karthik, who is a chartered accountant by profession and who is part of indirect tax team at Shreyas. And he's very dynamic and he specializes exclusively on indirect taxation, consulting, and litigation. And he has handled a lot of complex issues with respect to inverted duty structure refunds. So certainly, we all will be enriched by his presentation, considering his practical experience in handling inverted duty structure refund. So, any questions, any feedbacks, etc., are always welcome. With this brief background to the speaker on the topic, I hand out to Karthik for his presentation.
Thank you, sir. Am I audible?
Straight out class.
Good evening, all. Am I audible? Yeah. So I'll just share my screen and just kindly let me know if my screen is visible so that we can dive into the session for today. Is my screen visible? Can anyone let me know if my screen is? Yeah, okay. Okay. So I'm Karthik, a practicing chartered accountant who's engaged with Shreyas and practicing in the indirect tax litigation as well as compliance matters, including refunds. And without any further delay, I'll straight away dive into the topic of today's discussion. Yes, the discussion will be the right word because this will not be a monologue session or anything like that. It will be an heartfelt discussion based on the practical insights and the views on the legal provisions. And it will be, I would like it to be an interactive session where I can post questions and maybe it can be answered in the chat box or wherever permissible, the recipients can unmute and speak if required. So in this context, we'll go into the topic. So the today's discussion will be on the overview of GST refund on account of inverted duty structure. So the agenda for today's discussion, that will be the broader outline. So what is inverted duty structure? Or when does inverted duty structure arise? So as per the GST provisions, as listed out in section 54, inverted duty structure is the case where your rate on the input tax, the rate of tax on the inputs is greater than the rate of tax on the outputs. Where on such account you have unutilized the credit and it gets accumulated. So this gives rise to the situation of inverted duty structure. So in order to prevent the accumulation of credit on this account, government has come up with an facility to claim refund in this account on the input tax credit. As you might be aware, Input tax credit can be claimed as refund only in two scenarios. Only that is the first scenario will be the case where we are engaged in making outward zero rated supplies with or without payment of tax, on which GST refund of the ITCUs can be claimed. And the second scenario will be the case of inverted duty structure, where the rates on the input is higher than the rates on the output supply, on which the credit gets accumulated. So, without going further, I would like to stress on the words mentioned here of inputs, because in the act, if we see, the word inputs would have been used. So, what does the word inputs mean? Whether it means only on only the goods that is used as inward supply, or the services also, or includes capital goods also, will be a question. If we keenly observe, as per the definitions laid out in the GST law, the term inputs is not exactly defined anywhere, while the term input service, and capital goods have been defined. So, on this account, there was a litigation, several litigations going on, which was finally settled by the Honorable Supreme Court also, where they categorically held that the term inputs means only input goods, and it does not include input services. So, it is imperative to understand that only if the rate on the input goods that is used for the manufacture of the outward supply is higher than the rate of the outward supply, in that case only the inverted duty structure and the resultant refund shall be applicable. On the or put it to put it in other words, in case of the tax on account of input service or capital goods cannot be claimed as a refund under inverted duty structure, and it does not fall under the term inputs. Yeah. So, how to apply for refund, and what is the time limit to apply for refund under inverted duty structure? As applicable for most of the scenarios in which refund shall be claimed, including the refund of input tax credit, or the refund on account of excess payment of tax or assets, and form electronically in an application shall be filed electronically in form RFD01, which shall be filed online, and it should be filed within 2 years from the relevant date. The relevant date for the purpose of inverted duty structure will be the due date of filing GST or 3B for the tax period. That is, say, for example, if we are filing the refund for inverted duty structure for the month of May 24, then in that case, the 2 years time limit will be calculated from the due date of filing GST or 3B for the month of May 2024, which will be calculated from 20th June 2024, and 2 years will expire on 20th June 2026, within which the refund application on account of for claiming refund on account of inverted duty structure shall be filed. So, for what period the refund application is to be filed? That is, whether unlike the monthly return, should it be filed on monthly basis, or is there any option to file quarterly, or should it be treated like an annual return and filed annually, or can it be clubbed together across various financial years? So this has been clarified by various circulars and various judgments, which have very clearly stated that the refund on account of inverted duty structure can be filed for any tax period, being minimum of 1 month. That is, at least it should be one month for which the refund should be filed, and it can be for any combination of months. That is, for 2 months also put together we can file one application, 4 months put together we can file one application, or on quarterly basis we can file, or for the financial year as a whole we can file, or even clubbing 2 financial years together. That is, if we want to apply refund for the period Feb 2025 to June 2025 also, since the period spreads across 2 financial years, still it is permissible, and it cannot be denied, is what has been clarified. So, before going further, I would like to place few questions to be answered in the chat box. Just on the basic understanding of what amounts to inverted duty structure, I would like to post the question for the audience to put their answers on what they think will be the consequences of inverted duty structure and how the business will be impacted by the inverted duty structure on the products, where your input rates is higher than your rate payable on your outward supply. Like answers can be put in the chat box. Yes, the rise of product price. Yes, because the input cannot be fully utilized, it will be lying as the credit, and in some places the working capital aspects can be hit, and the price can be increased. So, is there any other consequences from the business side? Like many people from various sectors have also joined. So, what practical difficulties people are facing across various sectors on account of this inverted duty structure? Like various sectors are practically, yes, stock accumulation without working capital available. That is one of the major issues, and that is one of the reasons why the inverted duty structure refund is also available to enable business to have their working capital released, and it shall not be locked as a mere paper money. Locked as just the book asset as an input tax credit, because it is very important for any business to have working capital to plan their operations and have liquid cash in their hand to manage their day-to-day operations. And if significant chunk of their working capital is locked as input tax credit, it can be very detrimental to the interest of the business. So, on this note, that is the primary reason and the significance of this concept of refund under inverted duty structure, where the holistic understanding of this concept will be very important and an integral part of the working capital management of the business also, is what I will try to put forward here. Yeah, and just move forward. Yeah. So, under inverted duty structure, how the flow actually works. Just before going into the list and the further aspects, I'll just try to brief how the flow works. So, the essential condition for a person to apply refund as inverted duty structure is that, as said earlier, the rates on the inputs used should be higher than the rates on which the tax rate on which the outward supply is made. So, in that case, once there is some inversion on this account as applicable, then it should be checked whether the relevant outward supply or the outer products, that it can be goods or services. The outer products can be goods or services. Only the input on which the tax is getting accumulated should be only input goods. So, in this case, once there is an inversion, we should next check whether the outward supply of the goods or service falls under the negative list, for which the inverted duty structure is not applicable. So, this list has been provided by two notifications, notification number 5/2017 and notification number 15/2017. 5/2017 broadly deals with the goods aspects, and 15/2017 deals with only one particular category of service, that is construction, on which the inverted duty structure refund cannot be claimed. So, if we look at the list of the items for which inverted duty structure will not apply, that is, again to clarify, the list that has been shown on the screen now is relating to the outward supply that is being made. That is, if the outward supply made falls under any of these goods or services, then even though there is inversion, on account of the rate of tax being higher than the outward rate, still they are not eligible to claim refund under inverted duty structure. So if we, as you can see on the screen, there will be around 20 to 30 products that have been listed or listed for which the inverted duty structure refund will not be applicable. So if we look at the category as a whole, we can see predominantly the edible oil sector is covered here, where the essential oils like groundnut oil, olive oil, other oils, palm oil, sunflower oil, coconut oil, etc., have been notified, which means that on the outward supply of these products, the inverted duty structure refund cannot be claimed. Other than that, if we see earlier, the textile sector was also notified. That is from the serial number 1AA to serial number 6. On that is the second table that is reflecting on your screen, which includes the woven fabrics, of wool, cotton, etc. But by various trade representations and the council recommendation, the restriction on inverted duty structure refund on the textile sector has been removed with effect from 2018, where the inputs used after 2018 can be used as can be claimed as inverted duty structure refund. So it is important for the person who is claiming or planning to claim a refund under inverted duty structure to be aware of the list of products on which the inverted duty structure cannot be claimed. Because if any of the outward supply falls under this list, then there is outrightly the application is not valid, because the section 54(3) itself prohibits certain notified items on which the inverted duty structure refund cannot be claimed. So apart from the goods listed alone, listed here, we can also see that the supply of construction services, where it is intended for sale to one buyer, under specified circumstances, the inverted duty structure refund can also not be claimed. Yeah. So once we determine that our product or the outward product on which we are going to claim the inverted duty structure refund is not covered under the negative list that has been shown earlier, then we have to examine what will be the maximum refund eligible that can be claimed. So as per rule 89(5) read with circular 125, 125 of 2019, the maximum eligible refund will be the lower of the following three amounts. That is, the first amount that is calculated as per rule 89(5), that one amount will be calculated. We'll see how it will be calculated just shortly. So first that amount will be determined, and the second amount will be the balance in the electronic credit ledger as at the end of the tax period. That is, for the period for which refund is claimed, after filing 3P of that period, what is the credit ledger balance is to be seen. The third value will be the balance in the electronic credit ledger at the time of filing the refund application. So the lower of these three amount will be allowed to be claimed as refund under inverted duty structure for the relevant period. So the last two values, that is the balance in the electronic credit ledger as on the date of after filing 3B for the relevant period, as well as the balance at the time of filing the refund application, can be straight away viewed from the electronic credit ledger that can be downloaded from the GST portal, and there is no calculation involved on this. But the only intricate and the interesting point that is to be understood is relating to the first amount, where the amount is calculated as per rule 89(5). So rule 89(5) specifies the formula that is to be used to calculate the eligible refund amount, that is the maximum refund amount. So this formula this formula this formula, as you can see on the screen, it can be noted that before 2004/7/2022 the formula was different, and after 4/7/2022 the formula was different. This change in the amendment in formula was primarily due to the recommendations of the Supreme Court. In the case of VKC footsteps, where it was the Honorable Supreme Court mentioned that there is a need to modify the formula, and basis the just a minute. Yeah, sorry for the interruption. Just there was some technical issues where voice was not heard. Yeah. So this change in the formula was due to the inverted duties, the recommendations of the Honorable Supreme Court, and post which the formula was amended from 4th July 2022, where the amended portion is highlighted here. Currently, this is the formula that is used to calculate the inverted duty structure refund, where there will be two components. That is to curtail this formula, we can state the first aspect of the formula as A and the second aspect of the formula as B. So this formula will be technically A minus B, where we have to calculate A separately and we have to calculate B separately. So the amendment in the formula as highlighted in the red portion in the formula after 4th July 2022, you can see that the proportion of net ITC divided by ITC on inputs and input services has been added, which will increase the refund amount as compared to the earlier formula. So broadly, I'll just run through the components involved in the current formula that is effective from 4th July 2022. So the first aspect involved will be the turnover of the inverted supply of goods and services. So turnover of the inverted supply of goods and services means the outward supplies turnover on which the rate is inverted. For example, we are selling fabric items that is taxable at 5%, but the inputs are used at various rates like 12, 18, etc. So in this case, the 5% rate on which the outward supply is sold, the turnover of such products is what falls under the turnover of inverted supply of goods and services. The second component will be the adjusted total turnover. The mechanism of calculating the adjusted total turnover has been defined under Rule 89.4, which states that adjusted total turnover will be the turnover of the state or the union territory for the relevant period, plus zero rated supply as specifically calculated under Rule 89 itself. In case of zero rated supply of services, including the domestic supply of services, and it excludes the nil rated and exempt turnover other than the zero rated supplies. And your net ITC here will mean, for this formula, will mean the ITC on input goods. And the in the second leg of the formula, just a minute. Oh, sorry. Just a minute. Is my screen not visible? Just received feedbacks that my screen is not visible. I'll just share my screen again. Is my screen visible? Can anyone let me know, is my screen visible? Because I'm not able to see whether my screen is visible. Yeah, so my screen is visible. Okay, yeah, I'll just continue. So the second component of the third component of the formula will be the term net ITC that is used. Net ITC means, as explained earlier, it is the input tax credit on input goods alone. It does not include input services or capital goods. So this first part of the formula comprises the term A.
The second part will be the part B, where the terms tax payable on such inverted supply of goods and services. That means on the outward supply that is inverted, whatever is the tax payable on the service. That is in the part A, the turnover of such inverted supply of goods and services is included. In the part B of the formula, the tax payable on such inverted supply of goods and services is included. And such amount is multiplied by the proportion of net ITC. Again, net ITC has the same meaning. That is, it means ITC on the input goods divided by inputs availed on inputs and input services. So this is the only place where in the formula, the term input services will be used. So just it shall not be confused that by including input services here in the formula, it means that also the ITC, accumulated ITC on input services is also claimed as refund. It is not like that, because only on the net ITC, the refund is claimed, that is accumulated on account of inverted duty structure. Just to compute the maximum eligible ITC or the maximum eligible refund in this case, in the part of the formula, input services is used as the denominator in the second part of the formula. And once we compute these two parts of the formula, that is the part A and the part B separated by brackets, then the maximum amount of refund will be A minus B. So as you can see, this amended formula results in slightly higher refund as compared to the formula that was applicable as on before the amendment, because in the reduction, the entire tax payable on the inverted supply of goods and services is not reduced, but only the proportionate ITC to the extent of the total ITC, excluding capital goods, that only proportion will be reduced. So this amended formula resulted in slightly higher refund. So the question in this place will be whether this amendment shall be treated as prospective as laid down in the circular 181 13 2022, which stated that for all the refund application filed after the date of amendment, that is 4th July 2022, for all refunds that are filed after this date, irrespective of the tax period for which such refund is filed, this formula will apply prospectively. And it in turn said that for all the refund applications filed before this date, the earlier formula will be applicable. So this clarification issued by the circular that this amendment is prospective was challenged in the case of Tirtha Agro Technology, where the Honorable Gujarat High Court very recently has held that this application of the formula should be treated as retrospectively, because this was nothing but a clarification based on the Supreme Court's recommendation on the or the observation on the earlier formula, and it should be treated as retrospective application, and there should not be any bias to be created based on the date of filing the application. So this has been held by Gujarat High Court, and this can be used in cases where there is any contention against the prospective applicability of the from when this amended formula will be applicable. So now we have seen how to calculate eligible refund. So at this juncture, just to summarize whatever we have seen till now, first we saw what amounts to the inverted duty structure. That is, what is inverted duty structure and when refund under inverted duty structure can be claimed. Second, we saw in which form the refund is to be claimed and what is the maximum time limit by which the refund is to be claimed. Third, we dealt about the negative list. That is, the list of outward supplies, if covered by specified notifications, then on such outward supplies, the refund on inverted duty structure shall not apply. And then fourth, we saw how to calculate the maximum eligible refund on account of inverted duty structure, which will be lower of the three values that has been listed below. So at this juncture, I would like to place few questions on the just few open questions that can be answered by the experts in this call and the industry people, etc. What are all the difficulties that you face relating to the amended formula, or where you feel tax planning can be done in a better way so that the maximum eligible refund can be maximized to the extent possible? Is there any views is what I'm trying to uh, ask. People can drop their views in the chat box, or if required, if anyone wants to unmute and speak, you can again let us know in the chat box so that it can be arranged. Just anyone's observation on this formula, where you feel your eligible refund is getting reduced, or you are getting more refund because of this formula, or where you feel the government is biased by introducing this formula where the entire inverted credit is not being able to claimed. So is there any observation or suggestions on this? Like anyone can just put their views quickly. Maybe I can just wait for a couple of minutes to see if any views that come up that can be taken up for discussion, or else I'll just move forward with the further aspects. Guess there are no I guess there is no comments in the chat box. Yeah, then I'll just move forward, and maybe before moving forward, I will put forward my view and on this aspect. So uh, I got few comments. Yeah, so what I asked was that, is there any view on this amended formula where the experts as well as the industry people feel something prejudiced, or some planning can be done to maximize the output of this formula, or any suggestions for the improvements to be done in this formula, just from the general perspective asking. So I'll just put forward my views on this formula and where I feel few improvements can be done. First of all, I feel in the denominator, as inputs and input services are included, I feel in my humble suggestion, the capital inputs and the capital goods can also be added to the denominator part that has been changed, so that it will benefit the taxpayers. And that is one humble suggestion from my end, if anything to be changed from this formula. And with regards to planning the maximum output from this formula, I would like to focus more on the first component of the formula, that is the turnover of the inverted supplies divided by adjusted total turnover into net ITC. So I would like to focus on making this turnover of inverted supply by adjusted total turnover has 100% or close to 100%, so that a higher proportion of my net ITC will be eligible for refund. So there are few ways as the based on the circumstances of the situation involved, it can be it can be planned so that a maximum proportion of the net ITC can be availed as a refund. That can be done by way of taking new registration for this particular activity or various other suggestions based on the type of activity involved that can be planned in the effective way is what I feel. So I have got one suggestion. Sorry. Proportion of ITC with ITC. Yeah. Yes, definitely. Yes. That's what the proportionate of the ITC with the inputs and input services is what I also suggested, where if input the ITC on capital goods is also included, then in that case it will be favorable to the assessees in this regard. So I'll just move forward. So this is the basic discussion on the concept of inverted duty structure, on which products the inverted duty structure refund can be claimed, how to calculate the maximum eligible refund, what are the components involved in the formula for calculating the maximum eligible refund, etc. And along with once the maximum eligible refund amount is calculated, then as said earlier, the refund application should be filed electronically in form RFD01 along with supporting documents like your GST 2B copies, because in case of inverted duty structure refund of ITC, only the invoices that match with 2B can be taken into the net ITC consideration for claiming refund. And certain declarations, that is declaration under section 16.3, declaration under section 54, and undertakings, etc., are to be prescribed, and the entire set of annexures as well as the documents that are required to be uploaded along with the minimum, that is the minimum requirement of attachments to be uploaded along with the refund application has been mentioned in circular 125 bar 44 bar 2019, which acts as a master circular for filing refund application online, and what are all the attachments to be provided, etc. So with this understanding of the concept and calculation and the refund application process, I would like to throw few scenarios for discussion and how inverted duty structure will be applicable on these cases, where few of those are, if not few, many of those are actually under various litigations. And to limited extent, we can express our views based on the decided cases in this case. Yeah. So in the first scenario, where there is an accumulated credit on account of trading on the products. The concept of, just to clarify, the concept of credit getting accumulated on account of manufacturing will be very common, because when you manufacture a particular product that will be sold at a particular rate, various inputs at various rates will be used for manufacturing. So there is high possibility that the rates on the inputs will be higher than the rate on the output, and inverted duty structure can arise naturally. But in case where the same product is traded, in which scenarios the inverted duty structure will arise? Because if I am involved in trading of a product, it means I am buying and selling the same product. So at any given point of time, normally the rates will be same and there will not be any inverted duty structure scenario. But in which scenarios it can arise? One of the possibilities where I procure the product at a particular rate and I sell it after 3 months or some period, where during that period there is a change in the rate of the outward supply. For example, I procure cotton at the rate of 5%, for example. And 3 months from here, the rate of cotton gets reduced to 0.1% when I'm selling. So on that case, naturally, I have procured my input at 5%. I am selling my output at 0.1%, and there is a huge possibility of credit getting accumulated. So in this case, that does this scenario arise fall under the inverted duty structure scheme and refund can be claimed? Is the question that is being put forward. And this question has been answered by circular number 135/2020, which state that in this scenario, since the rate of the products are different at a given point of time, the inverted duty structure refund under section 54 subsection 3 clause 2 cannot be claimed. This has been clarified by the circular. However, this circular has on its own been challenged at various situations and various high courts where various portions of this circular have been struck down. So there is always a possibility to contest this circular where it is preventing this scenario from the claim of refund of inverted duty structure. As the case may be, it can be contended in our view. The second scenario will be where at a given point of time, the rate on the purchased goods is same as the rate on the outward supply. Both being the same commodities, it is same. But if you provide your outward supply to a particular vendor or particular government entities, then your rate will be at concessional rate. For example, if we can take ethanol as an example. When we are procuring ethanol, the rate will be at 12% in general. Ethanol that is not fit for human consumption. If we are selling it to petroleum companies, then your rate in certain circumstances will be 5%. If it is sold to outsider, it will still remain 12%. But if it is made to some specified entities, it will be sold at concessional rate. So does this scenario amount to inverted duty structure? Because in this case also, the rate on the inward supply is higher than the rate on the outward supply. Whether this fall under the inverted duty structure scheme. So this has been clarified again by circular number 135 of 2020, which stated that yes, this scenario falls under the inverted duty structure scheme and refund can be claimed on this account. Next scenario, where multiple inputs are used for making one outward supply. That is on account of manufacturing activities, or it can also, predominantly for manufacturing activities, where the primary inputs rate is lesser than the output rate. That is, the primary input is more or less lesser than or equal to the rate of outward supply, but there are other ancillary inputs like the packing covers that are generally taxable at 18%. Those items are the rates on those items are higher than the rate on the outward supply. Whether in this case, on account of any accumulated credit, refund can be claimed, stating that there exists inverted duty structure. So this scenario has been clarified by circular 125/44/2019, which has very interestingly said that when you have filed your GST or 3B, and even after paying your outward liability, if there exists an unutilized credit, then that means that there is unutilization of credit. And if any one of the product, even if any one or more of the products used for the outward supply of such goods has a rate higher than the rate of the outward product, then the inverted structure also exists. So these 2 points combined together, it gives the understanding that in case where there is credit ledger balance and where one of the component used in the outward supply, used for making the outward supply, the rate is higher than the actual outward supply. In that case, it can be said that such accumulation is on account of inverted duty structure being existing, and then refund can be claimed, is what has been clarified by section 125, and it has further circular 125, and it has further held that net ITC covers all inputs in the relevant period irrespective of their rate. That is, in this case, if my outer product is taxable at 5%, I use various inputs that are taxable at 0.1%, that are taxable at 12%, that are taxable at 3%, that is taxable at 18%. Then in that case, all these inputs, irrespective of whether that particular input rate is lesser than or higher than the output rate, entire amount should be considered as net ITC, which again falls in line with the earlier clarification that has been given. Now, the next scenario, where in case of merchant exporter, when does the scenario of merchant exporter arise? That is, when a person is exclusively procuring from the domestic market for exclusively making export sales. So in that case, they have an option where instead of paying the normal rate on their input supplies, they can provide few declarations as specified under certain notifications, and they can get the products as concessional rate. So in this case, the person or the domestic supplier who is providing these items to the merchant exporter, he will be providing it at very less rate as compared to the normal rate applicable to the product. That is, he will be providing his outward supply at 0.1%. But whereas his inputs on to make that product will be around 12 or 5% or 18%, where inverted duty structure exists. So in this case, on account of merchant exporter transaction or supply to merchant exporter, whether input inverted duty structure refund of ITC can be claimed, and this has further been clarified under circular 125, which said that yes, in this account also, since there is a inverted duty structure, refund can be claimed. And the last but not the least of the discussion, just steering the pot that has already been boiling hot, in case where the inverted duty structure exists on account of few products, as pointed out earlier, where only few products the rate is higher than the outward supply, but the actual inversion is due to any concession or subsidy that has been given by the government, not on the tax rate of the outward supply, but on the taxable value. For example, supply of fertilizers or assets. There are many subsidies that are available on the outward supply on which the manufacturers can sell. So whether this scenario can be covered under inverted duty structure is a topic of hot debate that has been going around. There are many cases that are going around. This has even been discussed in the 50th GST Council meeting, where the law committee suggested that it should be covered, but then the discussion was not concluded in that way, and we are yet to see, in our opinion, and case on case basis views can be taken, where the assumptions, the principles that are adopted in the earlier cases covered can be applied to this case to say whether it can be covered or not. Again, that depends upon each transaction, how it is structured, and what are the components involved, in my view. And as of now, this is an debatable, very much debatable topic. Yeah. So these are all few unique scenarios. Just wanted to point out where in such cases, whether the inverted duty structure refund can be claimed or not, or whether that falls under the term inverted duty structure. Yeah. So just at this point, I wish to stop for a couple of minutes and receive any queries from the listeners, if there are any relating to what has been discussed or whatever the practical challenges you are facing on this account, so that we can move on to the next part of the session, which might last for another 5 or 10 minutes, and we'll be on our time with this the session. So just if anyone can just ask any questions on account of the inverted duty structure, refund, etc. Yes, the definition of the turnover for the inverted duty structure is to be revisited. In fact, the term turnover on account of inverted goods or services has not been defined at all in the rules or in the circular, to be honest. So that is definitely some definition might be required to just clarify on what is to be included in that and not included in that. So is there any queries from the industry experts? From if I have output of 5%, 12%, 18%, I can claim input on 12%, 5% rate. So I just want to rephrase this question to and correct and let me know if my understanding is correct. So what you are asking is, you have outward turnover of 5% and 12% and 18%, and you have claimed input of 12% and 5% also, and you want to see confirm if the 12% and 5% input can be treated as inverted structure for the 5% output. That is what you are trying to ask for. If that is the question, then the answer is yes. Because again, the outward rate it is 5%. The input rate, one of the input used for that product is 12%. So if S for the output of 12%, I would have taken 18%. In that case, you can claim. See, again, that is what has been pointed out in this the third scenario, where it has been mentioned where in case multiple inputs are involved, but the primary input is not at the higher rate, but some ancillary inputs at a higher rate, still it can be treated as it falls under the inverted duty structure and refund can be claimed. So I guess your question is clear. So is there any other questions, or else we can just move on to the conclusion part of the session, where we'll see upon the various practical difficulties or practical scenarios where the refund applications are getting rejected, and for what reason the refund applications are get rejected, and what is the defense that can be taken by the taxpayers. Sir, whether my understanding that total output input along with the different tax rates has a total value of refund. Not able to understand this question. So you're asking whether the total input total output can be treated as inverted output, and the total input can be considered for the refund formula. Is that what you're trying to ask, ma'am? I'm not. If that is the case, then the answer is no, because your outward supply, whatever you are making, at least one of the component of input should have a rate higher than the output. is the basic criteria for transaction to be covered under inverted duty structure. So in that case, if any of the output does not have any input that is at taxable at higher rate, then it cannot be claimed. So your question was for 12% output, even lesser than percentage is claimed. My question is whether we can those mapped for. Yes, you can. That's what I am trying to tell. That's what, just to answer Harshita's question. That's what I'm trying to tell. If you are having outward supply at 12%, you have inputs that are used to make the outward supply that is chargeable at 5% as well as 18%. Your predominant input is at only 5%. Even in that case, since one component of the input used for making that outward supply is higher, the inverted tax structure arises. And if you have unclaimed balance in your credit ledger after filing your 3B for the relevant period, then in that case it can be read in lines with circular 125 that the accumulation of credit happens on account of inverted duty structure, and then you can claim refund for that amount also. You can include that also in the calculation. But only aspect that is to be carefully seen is whether after including the 12% rate in addition to whatever the lower percentage outward supply, whether the maximum refund formula gives a positive result. Because in certain cases, it might give a negative result, which might be a total anomaly. But if you keenly observe the formula, it is termed in such a way that there is also a possibility that more and more you include additional inverted duty turnover, the tax payable on it might have a higher ratio that might be deducted from the maximum eligible refund, and you might come up with a lesser. Yeah. So I guess that answers your query. The next question, whether all different rates at outward deducted with different rates, whether all different rates of output less different rates of input could be applied. Yeah, that's what. To answer this query of that has been posted, whenever you in the formula, if you see, I'll just go back on my slide. So in this formula, if you see, on the turnover aspect, two terms are included. That is adjusted total turnover. In the adjusted total turnover, anyway, apart from the nil rated and exempt turnover, you will be including all other turnovers. In case of turnover of the inverted supply of goods and services, only those outward supplies which have some component of input that is taxable at a rate higher than the outward supply, that is only to be considered as turnover of inverted supply of goods and services, and that turnover should only be used here. However, in the net ITC definition, you can use the ITC of various rates. As clarified by circular 125, the net ITC here means the inputs on the goods that has been availed during the relevant period. So here the bifurcation on the rate does not exist. However, for the term turnover of the inverted supply of goods or services, only the turnover of the outward supply on which the rate is lesser than the input supply, that turnover alone is to be computed, included in the formula. Yeah, yes, ma'am. Yeah, so again, just to explain it quickly, if you see, the formula has two components. First component is your turnover of inverted supply of goods and services. That means the outward supply for which the input supply has higher rate. That is at least one input. At least one input goods has a higher rate. In that case, such turnover will be known as inverted turnover, and the turnover of that amount of that outward supply is to be taken as the numerator here. The denominator will be your adjusted total turnover, that is your nothing but the total turnover of the state excluding your nil rated and exempted supply. Your net ITC will be your total ITC on inputs, irrespective of the rate of inputs. It will be the total ITC on the inputs that will be used here. In the second leg of the formula, as you have seen in the first part includes turnover of the inverted supply of goods and services. The second part includes the tax payable on such inverted supply of goods and services, multiplied by net ITC, divided by ITC availed on inputs as well as input services. So this gives you the proportion of net ITC divided by the total ITC apart from the ITC on capital goods. Yes, thank you. So on this account, we'll go to the conclusion part of this session, where I would like to discuss on few practical problems that we as practitioners are facing, including the industry people, where the refund application on account of inverted duty structure is getting rejected due to few commonly observed reasons. So first thing, there are many refund applications on account of inverted duty structure, especially in case where the products are traded. Traded in the sense you procure the same product and you sell the same product with a particular margin. So in this case, the earlier circular 135 of 2022, it specifically said that in case where the inputs and the outputs supplies are of the same product, then it will not be covered under inverted duty structure. This was severely contested in various cases, including the BMG Informatics by the where the Calcutta High Court decided. Calcutta High Court struck down this part of the circular. The Baker Hughes Asia Pacific, where the Rajasthan High Court held the similar position. Indian Oil Corporation case, where the Delhi High Court even held the similar position. And there is also one more case where the Kerala High Court held the similar position, stating that such restriction that inverted duty structure will not arise on account that input and output supply being the same product is not placed anywhere in the law. Section 54 does not block any of these circumstances. So in this case, the restriction that is laid by the circular 135 should be struck down, is what has been laid out in the various high courts. So just applying this principle, I would like to go back to the previous slides, where in the case one, it was discussed that in case where there is subsequent reduction in the rate, circular 135 states that that circumstance does not cover under inverted duty structure. So applying the ratio or the rationale of these judgments, where the particular part of the circular 135 has been struck down, even though it can be on a different aspect, but this that rationale can be applied to this scenario also, as the case may be. It can differ upon the actual cases involved, but just as a general view, this rationale can be applied, where it can be contested that circular 135 cannot lay down restrictions beyond those that has been laid down under section 54, because section 54 is the section that empowers the refund on account of inverted duty structure, and a circular cannot impose new restriction, and that there are various case laws that have held that a circular cannot impose various restrictions that are not provided in the law. So on this grounds, this rejection of a refund on account of inverted duty structure that is claimed by especially by traders, that is being rejected on account of circular 135, may be contested based on the facts involved. Again, whenever a judgment is being quoted, it is not an outright solution to anything. It just each judgment's essence is to be understood based on the facts involved in each case, and then the interpretation is to be done. So whatever is being given here is definitely a general perspective without involving any facts of a particular case, which might differ. And the second, moving forward, the second scenario where again the refund on account of inverted duty structure is getting rejected is on account where the officers are stating that whatever ITC that is included in the Annexure B or the attachment or the net ITC value that is used for the refund calculation, it is seemingly including some blocked credit. That is, they are based on the HSN involved, or based on the party name involved, it gives a suspicion that it might be a blocked credit. So in this scenario, whether they can straight away reject the refund merely on the suspicion of the eligibility of the ITC. So it has been held that it cannot be done it can, where there are various judgments available in the erstwhile service tax law also, and also in the GST law, where it has been held that in case there is any question or query relating to eligibility of credit, then a separate SCN under section 73 or 74 or 74A may be raised, and the eligibility shall be contested there, and it shall not refund application is not the place where the eligibility of ITC shall be discussed, is what has been held. So that can be used as a valid contention, as the case may be. And the third scenario is where, as we have seen, the maximum eligible refund should be calculated based on a particular formula. That is, I'll just go back again. Your maximum eligible refund will be lower of these amounts. That is the value calculated as per the formula, or the credit ledger balance at the end of the tax period, or the credit ledger balance at the time of filing refund application. So we arrive at the value based on these three numbers, and we find out the lower value. But after filing refund application, we find out that there is some arithmetical error in the maximum refund that has been claimed. That is, instead of my maximum refund actually eligible being 100 rupees, I have claimed refund only for 80 rupees due to arithmetic errors. Or while filing the refund application, I filled in the wrong number that has resulted in lesser refund claim. So for the same period, can I, and that refund claim has also been, the original refund claim has also been accepted. So once that original claim is accepted, for the same period, can I claim a supplementary refund for the difference amount? Because practically there will be difficulties in this, because if you claim refund under inverted duty structure for a particular period, for the same period you cannot file a new application. Portal does not allow you that, but legally can it be done? So this has been clarified by Circular 110 of 2019, as well as by the Rajasthan High Court in the case of Sri KR Engineering Works, where it has been held that where a taxpayer is eligible otherwise for the maximum refund, just because of arithmetic accuracy, where they are filing for lesser refund or filing nil refund by mistake, it should not be denied. And if the portal does not allow them to file another refund application for the relevant period under the inverted duty structure head, they can file refund application under all other refund or any other refund head for the period for the differential amount, and it shall not be denied because of this reason, is what has been held by this case and the circular. So on this note, just to conclude on the topic, this this is a topic that is of significance both to the taxpayers as well as the government, because it involves huge cash inflows and outflows for the entities as well as the government. So there are various practical scenarios, various practical cases that we are seeing on day-to-day basis, where there is abnormal delay in claim of sanction of refund, which is otherwise not provided in law. In some cases where taxpayers are facing portal difficulties to file their refund. One such difficulty will be where the maximum number of annexures that are allowed to be attached in the refund application. We cannot upload all the documents. There are size restrictions. So again, there will be requirement to submit the applications physically, etc. So having said all these, it is important to stay updated and up to date of the positions in particular on all aspects relating to tax laws, especially in relating to refund, which can be a significant contributory to the working capital management of an entity. So on this note, I would like to conclude this session, and I hope it was informative and helpful to the extent. Yeah. So any queries or anything can be conveyed, and if not, we can. Yeah. So if not, we can conclude this session. So next maximum 5 minutes is open for discussion. Anyone can drop the questions in chat box or give suggestions or views. Thank you. So any anyone willing to give any perspective from the trade side, from the experts here in this session? Anyone want to add on to anything what has been discussed? Anyone wants to convey anything that is important or ask their queries? The next 5 minutes is for is the floor is yours. Yeah, the maximum time limit to claim refund for a particular month or year will be whatever is the tax period that is involved. For that tax period, what is the due date to file GST or 3B? From that due date, it will be calculated as 2 years from the due date. For example, if you are filing for the period of May 2024, then your due date to file GST or 3B for May 2024 will be 20th of June 2024. So from that date, from 20th of June 2024, the 2 years time limit will be calculated. If you are claiming refund for 1 year as a whole, that is for 23-24 as a whole, then for each month, the due date will be separately applicable. So that refund should be claimed before the due date of the earliest month. That is, in case if you are claiming refund for 23-24, your first month will be April 2023. In that case, the refund, the GST or 3B time limit, the time limit to file GST or 3B for April 2023 will be 20th of May 2023. So from that 2 years, this entire application is to be filed, or else the portion relating to the April credit will be rejected. Yes. So I guess that answers the query relating to the maximum time limit to claim a refund. Next one, for turnover, whether we can take supply of export but not certified with documents of export. Another doubt, exported to another scenario, goods not cross the frontier of India. Okay. So in this case, there are two turnover components that are involved. That is, first one, the adjusted total turnover. If you can see in the formula, I'll just go back. In the adjusted total turnover, definitely the turnover of zero rated supplies or exported supplies is included as per the definition itself, which states that it includes all the turnover of the state or union territory. However, in the numerator, whether in the turnover of inverted supply of goods and service, the turnover of exported goods can also be included, is a question that is left unanswered, specifically by the provisions. There are various views possible, whether in this numerator the turnover of exported zero rated supply can be included, especially in case where the zero rated supply of goods made on payment of tax, where there is a possibility that on that account also the inverted structure may arise, and that turnover can be included. Technically, there is no bar on including such turnover, in my view, in the numerator part of this formula. But that is the question that is to be clarified by the law with conviction. So I guess that answers the question relating to the inclusion of the zero export aspect in this formula. The time limit for refund, uh, time limit for claim processing. Time limit for claim processing, it is not an hard and fast time rule. However, if from the date of application within 60 days, if it is not claimed, if the claim is not sanctioned, then in that case, interest will be provided by the government at specified rate. So the taxpayers will be eligible for that refund. But if you ask me the exact time limit within which the application is to be processed mandatorily, there is no such time limit. Rate of interest will be at 6%. Correct me if I am wrong. In my remembrance, it is 6%. 6% per annum. In case of normal refund, in specified categories, it will be 9%. So, is there any other questions coming up, or maybe Ignatius sir or Srinivasan sir can just take over and conclude? Yes. For how much amount we can claim a single refund, there is no such maximum cap legally on the amount on which refund is claimed. But practically, if you see, there might be few scenarios with the officers hesitating to process an bulk refund claim for various practical reasons. So that is to be sorted out on case basis on in which jurisdiction you are falling, and again the persons involved in the process, etc. But legally there is no maximum limit for which you can claim refund, subject to the formula or the computation mechanism that we just saw here. So I guess that's it, and just kidding. Yeah, thank you for asking the doubts, actually, because whatever you are asking, it is getting clarified for everyone. Okay, so just yes, yeah. So I would take a minute to thank the management to presenting me this opportunity to provide my insights on this topic, and hope it has added some value to the listeners. And whatever is the suggestions on the subject, or any views possible, or any opinions, etc., just not only in this session, you can any time reach me. My contact details are mentioned here, so you can approach me anytime. Any issues relating to indirect tax on the whole, we at Shreyas, we will be able to provide holistic services. So on this note, I would like to end this session, and eagerly waiting to meet you all very soon in any other topic. Yeah. So